All right, consumer confidence was picking up in December. A record $110.6 billion spent online this holiday season. Remember, not done with it. Former Toys R Us and Hudson Bay CEO Jerry Storch on whether consumers will, and particularly on the toy front, lead this parade for what is expected to be a robust holiday shopping season. Jerry, very good to see you.
Good to see you.
How are things looking on just the retail front in general from your perspective?
Very strong. The consumer has been strong all year. They carried that into the holidays, and sales continue to be strong. And I expect this weekend to be phenomenal. This is Super Saturday tomorrow, and the calendar is about as perfect as a retailer dreams of. This is what you'll wait for, and it doesn't happen very often. So Christmas on the Tuesday, longest period of time between Thanksgiving and Christmas. This weekend's going to be huge.
All right. Now, even in tough times, parents, adults don't skimp on kids. You've always reminded me of that.
Yep.
We've talked over recessions and bull markets alike. I guess the bigger question is what happens after this holiday, though. Everyone seems to be pointing to a slower economy, not a recession, but slower. What do you see?
Well, the consumer doesn't know that. And consumers tend to spend based on what's in their wallet now. Consumers are now. Yeah. And the market is forward-looking. And so you have a little bit of a disconnect going on there. So employment's high, wages are high. So outside of luxury goods, which are impacted by the market because there's kind of a wealth effect as the very rich people see their net worth decline. Outside of that,
Tiffany, right?
Yeah, Tiffany was that, plus what's going on in China, where they have big exposure, and the Chinese are very soft, partially because of the whole thing going on with the tariffs and the trade war. But regardless, the basic consumer is very strong. The economy is very strong on that fundamental level. Now, whether or not, they follow. So whether or not there'll be a recession next year and then the consumer won't have money in their pocket, that remains to be seen. But right now they do, and they are spending it, and they're going to spend it on Christmas, and they don't care about the government shutdown.
Yeah.
They've seen that.
They really don't.
They've seen that over.
We in the media, I think we say that we've gotten used to it. But let me ask you about toys, your lifeblood. And the dynamics have changed since your old haunt just fell into bankruptcy long after you left, I might point out.
Thank you.
But this concern that online has dominated this, Walmart has dominated this. Are there as many toys out there, or what? What happened?
So it isn't so much online. I mean, the alt-channel model is working, and as you point out, Walmart remains the market share leader. Target is very strong in toys, and Amazon is very strong in toys. So you can win multiple ways. But with a huge capacity taken offline with the demise of Toys R Us, you're looking at something that maybe 18% of the market. The supply side disappeared. You didn't find all that replaced immediately. And everybody tried to add a little toys. The people just playing around with it, the ones who added toys and never did it before, they're going to be so sorry, and they're going to lose their shirts, and they're not going to do it anymore. Right? Well, it is a complex business. You have to be able to pick the hits and back them big with inventory. And if you back the wrong things, it's just going to be write-offs come January because nobody buys toys in January. So you come back to Walmart, Target, and Amazon. They all bought more, but they didn't buy enough more to make up for what happened at Toys R Us. And there is a supply side.
When you say enough more, what's in short supply?
Well, plenty of hot toys are clearly out of stock. I read a report recently that many of them are already out of stock on the shelves of many of these other retailers. And one of the things Toys R Us always try to do is have them in stock all the way till Christmas.
But you had to make a bet. You had a good gut with this. We could go back to Cabbage Patch days and all. But the bottom line is that you are playing a little bit of Russian roulette.
Well, Toys R Us was integral to the market. It was part and parcel of the market. So it was difficult to tell where the vendors ended and Toys R Us began. So they are big losers in this, the toy vendors. I'm not saying they can't make it up over a period of years, but not in 1 year. And so the amount added by Walmart and Target and Amazon to the marketplace is insufficient to make up for what happened at Toys R Us. And we saw that in some toy data that was down pretty sharply at the start of the holiday season in terms of sales. So that doesn't mean kids aren't going to have toys eventually. The market will reset. New entrants will enter the market. Various things will occur. Maybe Toys R Us will come back. Who knows?
And a lot of the toy makers then open up their own sites, and you can buy directly from them. That's the thing. I'm just wondering where you see it all going then.
Eventually, I believe the market will reach a new equilibrium, unless there's a major player like Toys R Us. So I think it'll be at a lower level than it would have been because we all study economics in school and the supply curve and demand curve, and there's less supply. The equilibrium is going to be at a lower place, and that's simply what's going to happen.
But some can come back in different forms. I'm thinking of FAS Words. They shut down a store in Midtown Manhattan, reopen one, albeit smaller. So there's always the chance. I always think in the back of my mind, something as iconic as Toys R Us can't.
850 stores around, kind of Toys R Us and Babies R Us in the country. $8 billion of sales. That's not easily replaced. So, over time, the market will reset. In the short term, it's quite disruptive to have something like that occur. You can't make up for it in a flash. And it really does help to have a specialist category killer. You have that in electronics with Best Buy. You certainly have that in other categories and other segments of the market. In home goods, you have, in home building supply, you have two. You have Lowe's and Home Depot both. So it really helps to build a market. Now, consumers will still spend for Christmas. I want to emphasize that. Christmas sales are up. Holiday sales are very strong. The consumer has come to play, and they're buying. But if they don't buy toys, they'll buy electronics.
Could have limped through the Christmas season, though, and then reassess themselves.
The demise of Toys R Us has more to do with the high leverage on the company and the specific situation with individual creditors and what they wanted and how they felt they could get the most money than it had to do with an inability to compete.
I've seen that in scores of industries. You and I were saying during the break, you better some money than no money, and at the risk now, it's going to be no money.
There's going to be a lot more of it with Sears bankruptcy. We'll see where that ends up, but it's not going to be good. So Jim Barry filed for bankruptcy. All of these LBOs and highly leveraged companies, it's not going to be good going forward because retail requires too much capital right now in order to invest in the internet and the stores at the same time in order to build the perfect model.
And it takes passion. You have to be passionate about the product. As are you, young man. Jerry Storch, the former Hudson's Bay company CEO, former Toys R Us, Mr. Toy Giant. All right.